everybody. Welcome to the Technical Analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As we get started, keep in mind, as always, there's risk involved with each trade that you take, so you want to manage risk in a way that makes sense for you. And we'll go over some ideas in that regard if we find a trade or two to simulate. Also, keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, we can log in to our web trader platform, which allows you to trade on both MT4 and MT5 accounts from the same location. The same is true with our app that also has all of the same functionalities that we'll go through within the session. So if we log in the upper right-hand corner here, we'll be in the web trader platform. Now, before we jump into the technical analysis side of things, it's important to keep in mind that there's some big fundamental news going on right now. Coming up soon, within the hour or so, we'll have a rate decision out of the US, and it's expected the US will be cutting the interest rate. And then at the same time, after the rate decision, there'll be a press conference, and Jerome Powell will talk about monetary policy, what their thinking was with the rate cut, what their thinking is moving forward in terms of monetary policy. And so all eyes and all ears will be on this potential rate cut decision. Will they cut 0.25% as expected? Will they hold steady? Will they cut 0.5%? We don't know for sure. Usually it's in line with the expectation, but there have been some numbers of late out of the US showing lower than expected inflation again, which could lend to the thinking of maybe they have a stronger rate cut than expected, because the lower the inflation, the more likely that there could be a rate cut of maybe larger than 0.25%, which is what's expected, but we'll see. There's also an eye on the jobs numbers, but those numbers really haven't been coming out because of the government shutdown in the US. They still haven't agreed on a deal there to fund the government. And so, the non-farm payroll numbers, for example, didn't come out at the start of this month. And for the past weeks, lots of data has not come out because of the government shutdown. The folks that usually compile that data, well, they're not working, they're not being paid, and maybe are furloughed. And for the time being, a lot of data hasn't been available coming out of the US. So the last numbers that we saw were not good for jobs, and we see inflation lower than expected. So it sounds like, to me, probably there'll be talk about why there's a need for rate cuts moving forward, but we'll see. We can't predict for sure, but that's kind of the way I'm leaning, and you can make of it what you will. So beyond that, with that fundamental news being the focus, then we need to think about a technical strategy that makes sense prior to such a large set of data and talk that's coming soon. So clearly USD pairings will be affected. The equities will be affected really globally, but obviously we can focus on US equities and major indices. And so if we're looking at something like the US 500, it's been climbing to all-time high after all-time high recently. These are the one-day candles. We see a run-up coming into this rate decision. The anticipation is the rate cut, hence a lot of climbing leading up to this decision. The markets like the idea of rate cuts. And so we can take a look and see what's happening there. A lot of climbing. Now, if we go to the smaller candles, we'll see a bit of a pullback in the last hour or two, but not much. This was an all-time high here, just a few hours back, and then a pullback, and now bouncing back up. So depending on what Jerome Powell has to say, this climbing could continue. If we look at something that allows us to use AvaProtect, something like gold, what we see is gold had a run up today, and then now it's pulling back as we get closer to the rate decision. Overall, gold has had quite a pullback. We see on the one-day candles, over the past 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So about 2 weeks, gold has pulled back for a couple weeks. This could be a spot where gold is finding some support. Rate cuts tend to weaken a currency, tend to cause inflationary movements in the prices of things, and gold certainly is an inflationary safe haven for many who are looking for safe havens from a potential weakening effect that rate cuts can have on the US dollar. So if we're looking at this as a potential opportunistic entry point for gold, then okay, gold's all-time high was up here. And so technically speaking, we're sitting on a support level here where for 1, 2, 3 days, this price was a support level right around 39.45 and up went gold. Now we came back down. It broke this 39.45 area and came back above, and then earlier today hit that spot and bounced. So this is where we are, just above this support level. So a couple of different ways I could look at gold, and the reason I'm kind of staying away from the US 500 is because with the volatility of this rate decision and press conference, I expect a lot of movement in both directions on the equities, and especially US equities and US indices, and we don't have a feature on there to be able to necessarily protect with AvaProtect. And so if I want to get rid of this order window for US 500, if I'm looking to buy on this, I have the AvaProtect feature. I like this technical support level on gold with the 1-day candles. We've come back about 350, almost $400 dollars per ounce to the current price. And so where we sit right now, if you are thinking that fear could come back in with the government shutdown, with potential weakening of the US dollar, with a potential rate cut this evening, and maybe a lot of volatility because of the press conference, then this support level starts to look nice. If you think there's going to be a rush back into gold as a safe haven. So with 1, 2, 3, and then today, the 4th point of contact on this price, bouncing, and only once breaking. So 4 out of 5 points on this price, bounce. It's a nice technical support level on the 1-day candles as well. If you think the fundamentals align at least 50-50 on the fundamentals, which I think they do, and maybe probably a little bit better in the direction of buy, maybe with the fundamentals here, with the rate cut and press conference. So with that said, you don't have to agree, but if I was setting up to buy off this support level, I'm probably putting my take profit up near the all-time high, just in case there's a big rush up. I can always close earlier. So 43.50 would be just before the all-time high. Okay, stop loss. I don't need it. I'm going to use AvaProtect, I think, depending on the cost of it. Let me take this down to a smaller trade size, maybe a quarter of a lot. I'm looking at almost 9,000 profit. What's AvaProtect going to cost me? For 1 day, only 800. Okay, so 800 over 8,000. Okay, so the ratio is nice here for 1 day of protection. If I do 2 days of protection, it doesn't cost me much more. Okay, double the time frame to be protected. I don't need a stop loss in that time frame. Now, if I want to bring the cost of the protection down to be, say, 1% of my balance or so I just need to change my trade size. Okay, so 0.14. Okay, potential profit almost 5,000. Cost of protection about 1% of my balance, less than 600. Okay, so if I like that setup, then I'm good to go. My trade is activated. It's a market move. I'm already in the market, and I don't have to worry about a stop loss for now. Later, I can go where I can edit the position, and I could add a stop loss if I wanted to. Right now, I don't have it because I have 2 days of protection. Why did I choose to use protection and pay that cost up front? Because I know there's huge volatility coming very soon. With the rate decision and the press conference, if gold drops $150 an ounce, okay, I'm protected. I'm not going to lose thousands of dollars. But if it spikes $150 an ounce, which it could spike both ways that much, even this evening, then I could gain $4,000 or $5,000 and even close early. I don't need to wait for the take profit and the potential 5,000 profit that it was showing, or whatever it was. I could take 2,500 profit. The cost of the protection was less than 600. Okay, with the number of ounces that are open, you can make $600 really quick when you have 14 ounces on gold. Doesn't sound like a lot, 14 ounces, but we see gold move $100, $200 in 1 or 2 days' time a lot lately. So with the momentum that a rate decision and the press conference can bring, I'll take my chance. Protection for 2 days, I'm risking around 1% of my balance. I could easily make 3, 4, 5, 6% on a move like this, because the fundamental news could really work in favor, and if it works against, our risk is capped. Okay, and again, the technical setup that we're looking at, we go to those 1-day candles. Okay, that's a heck of a support level with 1, 2, 3. Tested it once and came right back up. That's a sign there are buyers down here. So if with the announcement it spikes down again, it looks like there were buyers before, there could be again. And if the news goes the right way for this trade, it may just go running up. Okay. And you can have a quick out. You could do a partial close. If you get up $1,000, $1,200, $1,500, you've already made back more than what you paid for the protection. You could close half the trade, put a stop loss down someplace. That's up to you how you manage the trade once it gets going. But the risk management side is covered here, and it's a really opportunistic entry point if gold indeed is going to try and run back up. Okay, we'll see how that goes. Now, what else could we look at? Well, rate cut could mean a weakening of the US dollar. So if we look at something like the Euro USD, 1-day candles. Okay, let me get rid of some of these lines. The technical setup here, and you notice I'm not even looking at the short-term signals from Trading Central right now. Why? The technical short-term signals, unless you're going to close in the next 45 minutes, they don't mean much to me, because the fundamental news is really going to drive some really big swings, and I wouldn't want to get stuck in a scalp type move right now. I'm looking at moves that can be a little bit longer term. So Euro USD, look at the 1-day candles. We were up at, let's look at this price up here. We were up at this price here just a few weeks ago, okay, about a month ago. 119, it looked like we were trying to break 120 even, 119 plus. Now we're down at 116.56. It's like 300 pips, not quite, 250, 260 pips. Okay, that's huge potential to come back up. Well, why wouldn't the euro have the possibility to climb against the USD? We've got a rate cut coming. We've got the potential in this press conference with the rate cut for Jerome Powell to talk about the need for more rate cuts. If he talks the other way, okay, let's risk X amount with AvaProtect again. If he says the wrong things and the USD strengthens more, if he comes out and says, no, we need to hold off on rate cuts, I don't think he will, but if he does, you cap your risk. If he comes out and acknowledges the fact that the PPI data recently shows lower than expected inflation out of the US, that's even more reason, and the jobs numbers being bad lately out of the US, that's even more reason if he talks about those things to say we might feel the need for more rate cuts, in which case it could be a reason for the euro to climb back up to where it was just a few weeks ago. Okay, so I'm looking at the fundamental news and not saying for sure that will happen, but saying there's a potential for a large move. And so Then I look at the technical analysis and I say, well, look at this support level here on the 1-day candles. 1, 2, 3, 4, 5, and even 6 here attempts to break below this price around 115.50, and it just failed to be able to get below and stay below for the past about month, 2 months. Back into August is the last time it dipped below this price line by much. So it's not that far down. It's like the risk if you get your stop loss below here is a fraction of the potential profit if it comes back up. Now I would say with the announcement, you could see a 67, 80 pip drop. It could hit your stop loss down here and then spike back up. Could happen. So again, I'm leaning towards AvaProtect, knowing there could be huge spikes in both directions in the short term, but feeling like the overall fundamental news maybe helps this support level to act as it already has and cause bounces back up if it does pull down. Okay, so if that's the view that fundamental news is better than neutral for a buy, potentially better than neutral, and you can feel the opposite and you go the opposite direction. Okay, but my point here is trying to get a better than 50% feel for what way do you think the fundamental news might go, and then seeing if you like the technical analysis along with that, and the entry with a nice support level, in this case on the 1-day candles. Okay, so if that's how you feel, and let's say I do, so then this is the setup you might do. AvaProtect. Okay, I don't want to pay $4,500 for protection, so let me change the trade size. 1 lot, 300. Okay, I'm probably comfortable around 600. Okay, so there's 550. Okay, 1.9. Okay, 579. If I was doing a 1-hour trade, 3 hours, 545. 6 hours, 511. It's actually cheaper for 6 hours than for 3 hours. Go figure. 6 hours, 1 day. Okay, 1 day is cheaper than 6 hours. The pricing doesn't make sense, but okay. And so I'll take 2 days protection. It's the same price as 6 hours approximately. So 2 days protection, 1.9. I can even go 2 lots. 556, 2.2, 2.1. Okay, 584. It's about 1% of my balance. Go 2 flat, 2 lots. Okay, so right around 1% risk for 2 days protection. To buy on the Euro USD. Take profit, I'll program. Stop loss, I won't. Take profit, why not up here? Can manually close it early, but if it goes flying up towards where it was around 119, let's say 118.50. $118.50 would be there, okay? Not having to reach this high, and maybe I look at this as a resistance point, so maybe I would be happy to hit that spot, which is 118.28. So let's see, what would I make? 118.28. Okay, around $3,400. Cost of protection $556. So it's around 7 times the potential profit to the cost of the protection. So I'm happy to pay this up front with the momentum I think that could come with the press conference, the rate decision, etc. Okay, so as I'm setting this up, then I'm comfortable with the risk, the potential profit, and then I can go ahead and make my move. Again, I have 2 days to allow this to spike around, to jump around, and to hopefully go my way. If, let's say it comes all the way down 100 pips, greater than 100 pips, and it starts to near this support level in the next couple days. Okay, I can close my trade if it's still protected. All that negative floating gets paid back to me. I'm only down that 500 something that was the cost of the protection. Then I could open a new trade with protection from down here. Again, 1% maybe cost on the protection. I set it up the same way potentially and see if then it would do like this one did and spike back up. Okay, so you can plan a trade set as well. And for that matter, I could put a pending order down here so that in the next couple of days, if it did come down and hit a price down here, could automatically open with a stop loss just below that price. Okay, so you could do it either way. Keep an eye on it to do another trade with AvaProtect if it did go flying the wrong way to another price and support level that you might like to re-enter without losing hardly anything except the cost of the protection. Or if it's just a little bit out, maybe you're patient with it and you can let the protection expire and then put a small stop loss. There are different ways to handle it if it's going the wrong way, but hopefully it's just going the right way and we can reap the rewards. But we can be comfortable with the side of risk and patient with it. Whereas if you had a stop loss down here, you hit your stop loss in the first 6 hours, then you don't know what to do. Do I re-enter? But with the protection, I can be patient. I'm not losing anything more by waiting. And then we see if eventually it turns, if it doesn't go the right way right from the beginning, which it very well could. We'll see. And so we've got our 2 trades set up, both with AvaProtect. You can monitor them here. And you see the gold shield that shows you that you're protected. And I'm really not concerned at all whether this was a little bit positive or a little bit negative right now. We'll see a lot of spiking, a lot of moving as the rate decision and the announcement comes in with a huge potential for profit. If either of these goes spiking the right way and you're up 1,000 right away, can close and take your profit. If it spikes the wrong way, you can be patient. Okay, this is the benefit of AvaProtect. Any questions, comments before maybe we take a look at another chart? I'll pause for a moment. Okay, and something else we could look at beyond the 2 moves we have here with gold and the USD. We could look at something like crude oil. You know, what's the effect on something like crude oil if interest rates are cut? In general, lower interest rates tend to spur the economy. That's the idea of it. And that tends to increase demand for energy in general. If you cut interest rates and economies start to do better because of lower interest rates, you know, it's cheaper to get business loans. It's cheaper to get loans to buy houses, to buy cars. Your credit cards have lower interest rates, etc. So lower interest rates tend to spur the economy. That tends to increase demand for energy then. Everything has to be shipped and bussed and flown, products everywhere. So if products are selling more, it creates energy demand for fuel and also energy for creating the products in general. And so this is the idea that maybe something like crude oil could be spurred to rise with the rate cut. Not to mention it's paired against the USD, which just the weakening effect potentially of the USD, if that happens, could help crude oil rise a little easier as well. We don't have AvaProtect on crude oil, so we'd have to take a different strategy. 1-day candles. Now we were looking a while back that we thought crude oil could push up towards 63, which it did, this line here, but then now it's pulled back to maybe an opportunistic spot if you think the rate cut could spur further bouncing of crude oil after all the dropping it did. So, and don't forget, Trump is talking to Xi Jinping tomorrow. He has a scheduled meeting, and he's been kind of playing it up that he thinks they've got some really good things to work out. He's talking very positive. He thinks both sides will be happy, work on some trade deal agreements, etc. So we'll see. That could also spur something like crude oil to go up, as well as the major indices, and also have a potential weakening effect on the USD if fear drops and people start to leave the US dollar maybe for other currencies. But we'll see. There's something to keep in mind that's happening tomorrow that also could move some of these AVA protected trades that we've got going. So looking at crude oil, what stands out to me on these 1-day candles is here. Okay, what happened here? Look at this climb up all the way up to 77. It pulled back, it bounced back up to 77, then pulled back, and we've been kind of slowly dropping since then. Okay, now the US has put sanctions on Russia, on their energy industry, okay, natural gas, crude oil. They're really looking like they may crack down on Iran, also with some sanctions and potentially further restrictions on the global supply of crude oil if they're trying to stop Iranian crude oil from hitting the market as well. So there's some larger regional things going on that could drive crude oil up, not to mention the potential rate cut this evening. So as we look at crude oil, maybe we need to go to 1 week candles. I see this as a slower move. It's not something that I'm looking at a few hours on. And we start to look at support levels. On the 1 week candles, we see 55 as a low point. We see it bounce back up to 77, down to 55, and seems to be maybe on its way back up from that bounce off 55. We're at about 60 and a half right now. So if I factor out this 64, and I start to look, where's the next resistance level? I see 65 and a half, 65 and a quarter as an old support on the 1 week candles. You see here support, support, across, support, support, and again here. And then here we break below it. So this was a long-standing support around 65 for a long time. So if this indeed is going to find any momentum to come up from 60, it looks like there could be a pretty good resistance around 65 and a quarter, right about here. So if you're bullish on crude oil because of potential rate cuts, because of monetary easing in the US, and you think that might spur crude oil to climb, we're about halfway between this resistance level at 65 and the support level at 55. We're $5.50 down, about $5 up approximately, a little bit longer distance to the support down here, almost equidistant between these two. So a slow play on this and maybe a faster play depending on what is said a little bit later tonight could be a move on crude oil. If I'm looking and thinking crude oil could go up, I'm probably going in pretty light. This is a longer term move. If I do a tenth of a lot and I'm looking for a take profit up around 65 and a quarter, I'll go 65 flat maybe. Go half a lot. Half a lot's 2,200 potential profit. And then maybe I don't put my stop loss down here below this big support. Look for something closer on the 1 day candles. And maybe as long as it doesn't drop below today's low, then you're comfortable with it. So if I'm putting a stop loss down here below today's low, maybe I'm looking to get below these wicks and something like 59 flat could be where I'm looking, that as long as it doesn't drop below there, then I'm looking at an uptrend. And if it does pull down, breaks below today's low and carries on another dollar, then perhaps the news was not good for a buy. And so 58.9, it breaks below, whoops, I missed a number. It breaks below 59, perhaps I think about getting out. Now that's a little more than my 1% risk, so maybe I just adjust this down. And by the way, there's nothing magical about 1%. You can risk the amount of your balance that you want, but you should measure your risk and understand how much you're risking with each move. So I'm looking to risk about 1%, and then let's see what the kind of profit will be. That's less than 1% risk, going after 1,400 profit, so almost 3 times that on the potential profit. And that's a nice little stop loss below this support level up here. Okay, this bounce today, today's low where it bounced is exactly where this bounced over here. So it's a nice little support level, and the stop loss is down $1 plus below that. So it would really have to convince us that it's a downtrend to hit the stop loss. Otherwise, it could be up and running to the next resistance level up here. And so with that setup, that's just a trade that we'll see how it runs, but could have some impetus with a rate cut potentially coming soon. Yeah, Joseph, all of the sessions are recorded, so if on and off you're having trouble with your connection, you can check on our YouTube channel. Probably by tomorrow mid-morning, this session will be uploaded to our YouTube channel, and you'll find all of the sessions that I do and our other presenters are there as well. So you can watch those at your leisure on your own time. Good question. Okay, I see a question that popped in a little while back. How much loss does AvaProtect? AvaProtect will protect all losses during the protected time period. So you can protect by the hour, you can protect by the day. Any losses during that time period, when the protection ends, if the trade is still running, it's added to your account. Any negative floating, the trade can keep going. Or if the trade is closed in the negative during the protection, say you got stopped out, all the negative floating is added back when that trade closes. You also, like I was suggesting, you can be watching a trade, and if it was going the wrong way and it reached the next support level, to take advantage of what the protection is going to pay you before it potentially bounces back up. You can close the trade, take that payment, reopen the trade, and then put a stop loss maybe below that next support level if it was going the wrong way. Then you only need to make back that small cost of the protection to be back on the set of trades back in overall profit. But hopefully it goes the right way. But AvaProtect gives you a lot of flexibility risk management wise if trades don't start out the right way. Very good question. All right, everybody, I think this is a good place to stop. Good luck with any trading you do this evening. Please be careful. It will be very volatile, fast movements. I would not try to time scalp trades. I wouldn't sit pending orders short distances away, thinking that as the rate decision comes in, that if you catch the move the right way, that you'll get a big move and enter on a trade. Likely you'll have slippage, even gapping on the charts. So trying to put pending orders like slightly above and slightly below the current price as the rate decision's coming in, you probably won't get the exact price you wanted on your entry. So I would caution against any short moves like that with pending orders in the time surrounding major announcements like what's coming. Okay. All right, everybody, good luck with the trading. We'll see how our simulated trades turn out in the coming days. I have a pretty good feeling on them, but we'll see. And till next time, I wish you all good profits. All right, bye for now.